Hi guys, it's so wonderful to join you once again on another episode. We're on part chapter 43. So we're going to be talking about a wonderful topic today. We're going to be focusing on specific cities, vibrant cities, I would say, in the next couple of episodes. Today I'm going to be focusing on a wonderful place in the Texas market. So stay tuned. I'll be right back here on Commercial Property Club podcast. Thank you once again for joining me. My name is Ola Ibiwoye. I'm your host today here at Commercial Property Club podcast. I'm so glad to be with you today. Today we'll be talking about aspect of vibrant markets. Today's topic is going to be called the Frisco Supply Halving of 2026. Why the window of capital is opening for apartment development. As you may all know that there are certain aspects of Texas that is really booming right now. And the city I'm talking about today is the city of Frisco. What is the city of Frisco, Texas supply doing right now? Let's consider it bit by bit. And just like I said today, we will be diving deep. As you all know, I'm your host, Ola Ibiwoye. We are firmly into 2026, as you know. And if you have your ears to the ground, you would know that in the multifamily aspect of things, you know that the headline has always been echoed out that same tiring chance that Dallas-Fort Worth is flooded with apartments. Walk away, oversupplies, killing the market, yada, yada, yada. It's true that the brother Metroplex actually took an historic wave of completions over the last 24 months, actually. Let's be factual about that. But seasoned real estate investors don't trade on broad headlines. We just don't do that. We trade on granulated data that can picture the way things are really. Here's the secret. Nobody else is talking about what's happening right now today, while the passive crowd is running away from the North Texas axis of things. A massive supply-demand anomaly has just formed right in the heart of Collin County. And today we'll be specifically focusing on Frisco, the city of Frisco, supply halving of 2026. New deliveries in Frisco's are plunging by more than 50% this year alone, even as corporate expansions and population growth sending tenants demand through the roof. Now, the window for capital is officially swinging pretty much wide open, and if you looking to place equity, private equity, or whatever equity out there in terms of sophisticated investors, you might want to look towards Frisco. Buying at a safe base is perfect now. This is the exact moment for you to really plunge in, actually, the moment you've been waiting for later. Let's get into the mechanics. Actually, I have some mechanics that I want us to look at today. Number one, what about the macro reality of things? Let's do the macro reality check between DFW versus Frisco. I'm talking about the Metroplex generally. Let's look at the actual data to back this up. And if you pick up the latest of 2026 National Multifamily Investment forecast from giants like Marcus Millichap, or look at the institutional data out there from Institutional Property Advisory, for example, IPA, you will see the macro reality of things clear as noonday. market widening across DFW, vacancy hitting an elevated peak of roughly there about 12.2% or 12.5% early this cycle. Now, the market has been actively digesting a backlog of units, actually, the delivery of units leftovers from the massive building boom of the year 2024 that spans up to 2025. Now, that structural overhang scared a lot of an absolute flood of institutional capital actually out of North Texas. A lot of people were kind of like, very cautious in terms of capital disbursement, most especially institutional capital. And then that's, you could see within the last 2 years, 24 months, leaving a lot of local projects starved of equity. And without equity, you can get the deals done. By now, we all know that. But here's where the story gets pretty interesting, and where the city of Frisco completely decouples from the broader DFW supply narrative. Sometimes some of these narratives are quite authentic in some pockets of the market. According to the latest IPA reports, sub-markets that were previously jammed or slammed with inventory, specifically places like Ireland, the city of Ireland, the city of McKinney, and Frisco, they're transitioning rapidly actually. For Frisco specifically, new deliveries hitting the market this year are projected to be less than half of what was supplied in 2025 levels. Now think about that. While the national perception is that this particular area is still deeply oversupplied, the reality on ground is that the spigot has been cut into half. Actually, Frisco is moving from an overbuilt suburban corridors into a highly localized supply that can create voids that investors can fill in. Capitals can come in and pretty much support projects that numbers look pretty good. And it's happening right now as I'm speaking. Major corporate mixed use expansions are hitting quite some numbers of maturities out there. So we want to look at this holistically, understanding that indeed there was an high supply. But right now, as we're talking right now, capital disbursement is pretty much taking space in Frisco. And savvy investors that understand how this work will pretty much take the opportunity very serious. Now, the second thing I'm going to talk about today is looking at the underwriting mechanics of supply collapses. Actually, you can do deals without underwriting the numbers and looking at how the numbers work. To understand why this is happening, we have to look under the hoods at the underwriting mechanics of how a supply collapse forms. To go back to the late 2023 and 2024, interest rate, as we already know, were at its peaked. The 10-year treasury spiked, and the construction financing became prohibitively expensive. Actually, regional banks stopped writing checks. They really stopped writing checks. Underwriters were quite pretty much, mostly on holidays. They weren't writing the checks. The debt funds started and the debt funds started demanding massive equity cushion. Your levels are quite very minimal because of these capital constraints. So new construction in Frisco pretty much dried up entirely, because multifamily asset takes there about 18 months actually to 24 months to completion, to go from breaking the ground actually to certificate of occupancy. The lack of building starts 2 years ago is manifesting as a severe drop-off in completion as of today. Now, look at the demand side of the ledger. Actually, Frisco isn't just holding steady, it's expanding actually right now, thanks to a stable 1% positive employment growth rate. Yeah, the employment growth rate has really much increased, pretty much driven by corporate relocations. Actually, there's been a lot of relocation to the north axis of Texas, and Frisco is not exempted from the benefits of a lot of all this corporate giant. Thousands of high earners of white-collar professional jobs are continually moving into the county, Collin County to be specific, where you find Frisco. And what happens is when you mix a 50% drop in new apartment completion with an unwavering influx of corporate renters, there's that rapid absorption. The massive inventory that was under stabilization for the last 18 months is being pretty much pushed or absorbed or swallowed whole by the market, absorbed into the market. Acquiring or funding asset during this brief time eliminates competition actually from future projects. You are underwriting you're underwriting deals actually against a backdrop where no new developers can afford to break ground next door to you, giving you an absolute monopoly on premium tenants as the sub-market really rapidly stabilizes as we're talking right now. Now, let's consider the aspect of limited partners in this scope of things. Strategic action plans that you can leverage for limited partners that are going to be part of your deals out there, part of your group, or part of the people that you're going to bring together. If you're a limited partner looking to put money to work in this part of Texas, not Texas today, you need a precise strategy. Actually, you can't just throw money at any deal and expect the market momentum of years like 2021 to save you. You need a rigorous framework for evaluating the general partner who you are partnering with, actually, who are targeting the Frisco aspect of things, particularly in the class section of Class A and Class B assets right now. So you need to be vigilant, you need to be strategic. When a GP brings you a Frisco deal this year, here's your 3-step recommendation, I would say. Just recommendation as to how you can operate as a limited partner investor in some of this deal. Number 1, make sure you vet them. I'm talking about your GP. You got to have a vetting checklist. Identifying 2026 lease-ups for operators acquiring these newer deals, institutional assets that eat the market over the last 12 to 18 months. These are the property that are currently burning off their initial concession. Packages like those every 6 to 8 weeks are free specials. As those concessions drop off, the effective net operating income automatically does really spike, giving you immediate upside of thing. Then audit the cap rate base of things also too. Ensure your GP is buying at a realistic cap rate baseline. Make sure you know that the baseline which they're comfortably entering, which might be in the space of about 5.5% to 5.8% range. Buying at this adjustable base means you're not paying a premium for future growth that you're still speculating on. You are buying the asset at the replaceable cost or even below replaceable cost. Then also to stress test the 2027 pipeline. Make sure you do that with your GP. Ask the GP to show you the pipeline of competing asset within a 3-mile radius of the deal. The asset, I'm talking about the asset. Because of the construction freeze, you should see an almost completely empty delivery schedule for 2027. The massive supply void of 2027 is your structural safety net actually. So make sure you understand that even if rent growth stays conservative this year, the absolute lack of new products for the next year makes today's purchase basis incredibly actually safe within that scope of things. So having said all these, discussing all this the last number of minutes, let's look at the summary, the general consensus of what we're taking away from today's episode. To wrap it up, what are the lessons of the first quarter of 2026? Very simple. In real estate, confusion is a commodity, but clarity is currency. We just cleared some wrong notions about the North Texas, the city of Frisco, the border market confusion surrounding DFW actually, which speaks about historical suppliers created an artificial discount of premium North Texas real estate and places like Frisco. But the localized data tells us that even Frisco has officially broken away from the pack, with deliveries cutting in half. Employment indicator remain intensely very, very strong, and a clear path to concession burn-off actually. It's what we're seeing. The risk profile for Frisco apartment development, apartment investment has really dropped significantly. One can say, while the upside potential has really looked better and promising. So the window for capital is open, but it won't stay open forever. Once the institutional funds realize the supply wave has dried up, the bidding war really will come in full force, will return. Cap rates will compress and your entry bases will disappear. The time to underwrite people is right now. So as we deep dive into the city of Frisco, it's a great market, I would say. For the first quarter of 2026, it's stabilized. If you are an active limited partner looking to review deals in Collin County, or general partner with a project that pencils under the supply, that looks at the void dynamics, let's connect with me here at Proper Commercial Property Podcast. We are an affiliate of SSF Investment Group. If you want to look at some of the data models that we discussed today, if you want to talk about it, even more specific apartment development opportunities we are tracking across the city of Frisco in Texas, join the conversation with Commercial Property Club. You can go over to our website, www.commercialpropertyclub.net. You can send me an email, ola.i@commercialpropertyclub.net. Don't forget to subscribe to our YouTube channel, also to leave us a 5-star review and share this with one many people out there looking to grow their portfolio this year 2026 in apartments. Let us keep the conversation going, okay? You can also connect with me on LinkedIn, Facebook, and also too on Instagram, Commercial Property Club. I'm Ola Ibiwoye. Thanks for tuning in today, and stay tuned. Trust the data and keep adding value when it comes to tangible assets like your apartment building. I will see you another time. Thank you.